providing unique insight into the day's top business stories. Headline with Howard Green. Weekdays, 12:15 Eastern, 9:15 Pacific on BNN.
After only a little over a year, BMO Asset Management has carved out a distinctive niche in the Canadian exchange-traded fund market, partly by launching new products in previously unexplored areas of the market. For a closer look at the strategy, from here, we turn to Youn, Director of Global Structured Products and ETFs with BMO Asset Management. It's good to see you. So, what is this landscape like? Describe for the uninitiated viewer what we're dealing with here.
Sure. Well, ETF landscape in Canada is pretty diverse, and there's about 161 ETF listed on the TSX across about $38 billion. And BMO has come into the marketplace about a year ago, and we're at around $700 million in AUM.
What's so attractive with exchange-traded funds?
Well, ETFs in general fulfilled an investment solution for retail clients and institutional clients. And you're getting access to marketplaces like emerging markets, emerging market debt, fixed income instruments that are difficult and challenging to invest in, and it makes it easy for most clients to invest in those areas.
What about the fees?
Fees are extremely low. We range anywhere from 15 basis points to 65 basis points, which in real terms, if you invest about $10,000, hold that position for a year at 15 basis points is $15 in fees.
Okay. What about liquidity? Let's talk about that, because that's always a concern with people who are putting a toe into the marketplace.
Absolutely. Liquidity is a question that comes up either number one or number two. And really, liquidity has been written about, but a little known. And so what's primary importance of liquidity is a signal that an ETF is popular. But secondarily, more important is that you have a tight bid-offering spread and size on either side, meaning a client can invest and exit a position easily. And what most clients should be looking for is a penny spread, or as close to penny spread as you can get, and size on either side, meaning 10,000 shares at $15, there's $150,000 to buy. Typically is a normal circumstance.
Where do you see the market for ETFs going? Is there any, do you have any way to forecast how big it's going to get?
Well, Investor Economics forecasts ETF market in Canada to be about $105 billion in 6 years, so 2016. In the U.S., you're going to see a doubling of assets over the next year or so, and going from $1 trillion to $2 trillion. So there's a sizable projected growth in Canada. A lot of clients are moving their active investments to individual ETFs, but also individual stocks to broad diversified ETFs as well.
What sectors are we talking about as being popular?
In Canada, we filled quite a bit of areas, and one of the key areas is NASDAQ, technology sector, for example. If you look at the technology sector in Canada, you're still looking at two companies, 5 broadly, and dominated by RIM and CGI. But when most clients look at technology, they think about Google, Apple, some of the U.S. names. So we have NASDAQ 100, ZQQ in Canada, currency hedged, and that's one of the areas that's had a lot of highlights and a lot of clients investing money into it.
Yeah, currencies are interesting to a lot of people, but too risky for most people to play. Is that right?
Right. Currency is a sector, it's a diversifier for a lot of clients, but Canadians investing in the U.S., whether you own real estate or individual securities, your exposure is to U.S. dollars. So given that fact, bringing U.S. securities to Canada, listed on the TSX, currency hedging it mitigates any currency U.S. dollar exposure, as an example.
That brings up an interesting point as well, is how does a person who is investing in ETFs, how do they best protect themselves?
Well, investing in ETFs allows clients diversification, first of all. So it mitigates single stock exposure. So what you're getting is precision in your investment and really transparency. So you know exactly what you're investing in, you know exactly what the currency exposure is, and what you're protecting yourself is from single stock risk. really, by getting a broad diversified ETF.
Is there any downside to exchange-traded funds at all?
Well, potentially exchange-traded funds could get very exotic, and really it's that due diligence required, understanding what you're investing in, whether it's commodities or gold or specifically equity positions, really understanding what that particular mechanism is for that ETF is primary importance.
And you actually design these funds?
Right. The team at Bank of Montreal has the most amount of experience in constructing ETFs, and we've just come here about a year ago, had phenomenal success of launching 30 ETFs and constructing it with some thought and methodology behind it. And one of the key areas is equal-weighting a position versus market cap, and we have a suite of equal-weighted ETFs.
So basically, if we've piqued somebody's interest here who's listened to you describe all of this, they just go to you and say, invest me.
Right. So typically a client will have a discount brokerage account or a full service account and with a financial advisor, and they will take a position in an ETF really expressing their investment views. And so if somebody wants more knowledge, we have BMOETFs.com as a starting point, but really it behooves an individual to contact a financial advisor or do their own research.
Very good. Very illuminating. Thanks for coming in.
Thanks, Mike.
Our guest has been John Youn, Director of Global Structured Products and ETFs with BMO Asset Management. Coming up, we're going to be examining the relationship between Canada and the United States. And the street continues after this. 21 past the hour.
Trading is war. Cost is an enemy. Technology is a weapon. Arm yourself. Open an account. Get 150 free trades. Win. Virtual brokers. Experience the advantage.
I switched and got a better handle on my finances.
I switched and got financially